Today is September 25th, 2022. Current Bitcoin price is $18,979.
Welcome to the BitBite podcast, your source for news and information about Bitcoin and the cryptocurrency space. This podcast is meant for educational and entertainment purposes only and is not financial advice.
Another somewhat extended absence. What's going on, Rick?
Oh, not much. Just trying to stay healthy.
Trying to stay healthy? You've
That's
been
right.
working out regularly?
I'm trying. I'm doing like the 6 ounce or the 12 ounce curls pretty regularly.
Nice.
Yeah.
Nice. Got to keep that in. As long as they're lights, though, right? Like you don't. What's it? I saw a marketing ad for athletic beer the other day.
Really?
Yeah, I'm like, let's be clear. Like, alcohol in general is a poison, right? Like, I mean, that's most things that alter your consciousness are things that basically bring you to the verge of death in some way. Kind of removing some of that, whether it's mushrooms, alcohol, whatever the case may be.
Yeah, but alcohol is definitely probably the worst thing for you.
It kills your entire body at once. We don't want to mess around with just parts of it.
Yeah, I mean, your brain on mushrooms is one thing, but your liver's fine.
We kind of had talked earlier in this week, and we meant to kind of record, but we basically had conflicting schedules. But man, we've had we've had a doozy of a week, huh?
Yeah, I mean, it's not exactly a slow news week, so
yeah,
might get cracking.
There's a lot going on here. We had Bitcoin. Trying to remember, when's the last time we recorded? Was it around? We were still in the 20,000 range, right? Or have we already dipped below?
We had dipped kind of in that. We were right on the cusp, but it had gone to 19. I don't remember if it was at 19 or if it was at 20 at the time.
Yeah, and the thing that's concerning for me with the Bitcoin price, not that I want to spend a whole lot of time on it, is that we keep on tapping off this line. And I mean, it's held pretty well for us, but if you keep on, it's just like a trampoline, right? Like when you keep on bouncing off of something, over time, it's going to break.
Yep. Well, it's trying to test its new lows. It's not really breaking out. I mean, it had a little bit of a breakout earlier this month where it went up to 25, roughly.
So for this month, I've got the 1 month chart up. Our high was 22,781.
22. Okay. Sorry. Yeah. So that was it kind of broke out there, but then it's been downhill ever since. I mean, it's just testing new lows. And if it keeps doing this and it finally breaks through, we're going to see a serious drop in Bitcoin price, I suspect, here in the near future.
Yeah. No, it's not going to be fun. We'll probably be heading down to, because really, I don't know what support lines we would have next. If we'd have to go way back in time to kind of see some of that stuff, but I'm going to guess we'd probably have another support level right around 15,000. And then after that, we'd probably have another one around 11,000.
Yeah.
But then, we got floor underneath. And that's going to take us closer to the lows if we get down to that $3,000 mark that we were at right as the pandemic began in March of 2020. So
yeah, I don't see it getting that low, but I wouldn't be surprised if we are seeing sometime in the near future 15 and potentially, like you said, 11 or 12. I mean, that's not out of the range of possibility.
Yeah. One thing that I think is kind of interesting too, I mean, so the weird thing about this is every time we've had this kind of thing happen so what we're talking about, I guess, if you don't know what happened, CPI numbers came out. We knew the Fed was going to raise interest rates again. Because the numbers especially came out higher than what they were anticipating, but they were still lower than what they were previously. But they didn't see as much of a drop as what they were expecting it to be, correct?
Correct.
I think they were expecting CPI numbers to come out at 8, and we came out at 8.3, whereas the previous month we were at 8.6. So there was a drop, but it wasn't as significant as I think the Fed was hoping for. So The big question became, is the Fed going to raise interest rates by 75 basis points, or are they going to go a full 100 basis points? part of me kind of wishes they would have gone a full 100 basis points. Mainly just because I'm getting to the point where I'm like, just do it. Just, if you're going to do it, just do it. Stop this kind of...
You're almost like... You're like trying to talk somebody off the ledge, of a bridge. And you're like, just
do it.
Just do it, dude.
Just do it.
Stop it. Just stop it.
Just slit the throat already. Like, I mean, like, we can't recover till we get to the bottom, right?
That's true. And the thing is, the bottom on this hole is going to be pretty deep, I think.
Well,
and that goes for everything.
Yeah, and previously we had talked, which, I mean, you and I both were kind of like, I don't know. Jerome Powell had talked about a soft landing, right? And
yeah, we said that was impossible.
Yeah, in this most recent meeting, he said the more prolonged this becomes, the less likely a soft landing is going to be. So
he's wanting that he's not putting balloons on the underneath that bridge for that person to jump off.
No, he's just like, we're gonna build up that concrete floor real good for you.
We're gonna reinforce it.
When you hit, it will be a nice splat. And the sad thing again is that, I mean, really, when they talk about this stuff, what they're talking about impacting is the poor. I mean,
of course,
your lower, I mean, probably even your upper middle class to the poor is going to be the ones that are most impacted by this whole scenario that they've got going on. And they just don't care. I mean, frankly, to them, it's all about the numbers game. They have stated that they want to get it back to inflation back to 2%, and they're going to keep going until it's done, till the job is finished.
I just don't see how that's possible, especially when they Congress keeps passing bills that are, they're not really raising taxes. They're spending a lot of money, but they're not generating any revenue on their end. So they're cranking up the printing press no matter what anybody says.
Yeah. And that's the thing. They're still doing it on the back end. I mean, when we look at that, anything we're doing to support Ukraine, that's printing money. Anything where they're doing the student loan forgiveness, that's printing money.
Exactly.
They haven't stopped.
Well, in the Inflation Reduction Act, all that stuff that they're giving to tax credits for this, that, and the other on solar, they're just basically printing that all as well. So it's the inflation. I mean, well, whatever the name is, you can pretty much assume it's going to be the opposite. Like the Affordable Care Act under Obama. I don't know about you, but my insurance it's not become more affordable since 2009 or whatever that was passed.
No, and I mean, really, like the Affordable Care Act, my personal opinion, and because I already had insurance, right? Like I wasn't one of those that did not have insurance, and I wasn't one of those, and I don't know what that's like. I want to be fair, right? Like, I mean, for the most part, I've always had a job that offered some sort of an insurance package ever since my adult life, pretty much, right? Except for a few stints here and there where I was unemployed. But as soon as the Affordable Care Act came out, that's where we moved to the HSA and all this other stupid stuff that I personally like. If you're healthy, HSAs are great. If you're a healthy person, HSAs are awesome because then you can just sock that money away and then you can start to invest that money and earn dividends off it. You start to earn an interest yield off it, which is awesome. But then when you have somebody that's sickly, that money is not enough to cover medical expenses, or if it is, you have got to double down on your investments within those. Yeah. So I missed like the old care system where it was like, you know what, I went into a doctor, it was a $20 copay. I knew what I was going to have to pay, and maybe it was overcharging on some things and then undercharging on other things. But at least I knew then this is what it is. And then with the HSA, like you had to negotiate your rates with your doctors, those types of things. I can understand that. I thought it was a horrible thing. This was the first year since kind of the Affordable Care Act came into play where we could go back to a primary care physician or a PPC kind of plan, right? So I jumped on it. I got back on that right away. Not that I'm not healthy, but I'm not going to point fingers.
Yeah.
So, yeah. Anyways, to kind of get back here, we did see the interest rate go up from 3% to 3.25%. Well, it's 3 to 3.25% is the current interest rate from the Fed, which is higher than it's been in a long time. And I put up a chart on. I'm not talking to you, listening device. I put up a chart on the Discord discussion, looking at the the mortgage rates and recessions, kind of how they balanced out. And it was kind of interesting when we were looking at this, because we were talking about housing previously. I think we were talking about that in regards to BlackRock.
Yes.
You see interest rates are starting to get back up to the point where they were right around 2008 when we had that economic crisis. The housing crisis from that time. And then foreclosure activity starting to increase too, which we knew that was going to happen.
So it's pretty crazy to look at the graph, like in the 80s, when it's, at 18%.
Yeah, 18 to 13% mortgage.
Well, and then that was the ultimate peak, but in the early 90s, like 91 recession, it was 11% to 8.75% is what it always drops during the recession.
Yep. Yeah, except for the current recession that we're in.
It's not a recession.
Oh, that's right. They redefined it. I forgot about that.
They redefined it a recession. It's not a recession.
It's not a recession. We're going to see Q3 numbers here pretty soon. And do you think they'll admit they're in a recession yet?
I don't know. Is it before or after the election when it gets announced?
I would assume it's going to be before, because Q4 starts in October, right?
Yeah.
The election is going to be in November, so they're probably going to release the GDP numbers in October or November 5th, right after the election. Like, oh yeah, no, it's a recession now. You guys already made your votes. CPI numbers, we talked about that, 8.3. Housing market trends, we talked on that a little bit. Like, we're starting to see an increase in the number of foreclosures. We've already beat out the 2021 numbers by foreclosures for the whole year, and we're not even finished with this year yet. And I still don't know. This is through June, right? So this was only through the halfway point of the year. So if we assume that would double, that's going to take us to 300,000 homes, which is going to put us to 2018's 2019 numbers.
Wow.
I mean, I don't know if that's an appropriate extrapolation of that data, but I mean, if we're seeing that already at a halfway point this year, that's what I would see.
Well, the rising interest rates, they're not going to be helping home sales.
No.
So.
And there was actually on this here, it was talking about the inventory. I don't have it on here anymore. It was on something else that I already closed out. But it was talking about the inventory, how it's starting to increase, right? In which we had seen an opposite of for basically going 2020 into 2021. And actually one discussion that I was having with a friend of ours that does a lot of social assistance programs for underprivileged people, they were talking about how they started to see, like, for them, a big increase in home purchases because people were stuck at home in like a little apartment for, basically a year with their families, and they were just like, we need more space, we got to get out. And that's part of what they saw contributing to some of the home purchases. I still think there was a lot going on with BlackRock, but there was a lot of investment groups buying up properties. So,
yeah, it's just, I'm really curious. I mean, I think there's going to be a winter across the board for everything. But yeah, I wonder what the housing prices are going to do. I don't know. In a lot of ways, this feels like 2008 all over again.
Yeah, we're seeing a lot of the same kind of numbers across the board. I mean, and a lot of it's corresponding back to where we haven't seen some of this stuff since 2008, right?
Right.
And so, I mean, and basically with how early on we still are with this, that crisis is coming. But here's the thing, right? Like, I mean, if all that holds true, the Fed had to print like crazy in 2008. If this continues the way that we're seeing right now with this trend, they're going to have to open up those pipelines again. even more so than
Yep.
what they are, right? I mean, because we know it's still happening. We know they're still printing, but yeah.
Yeah, but then at that point, it becomes death by hyperinflation instead of, I don't know. You know, I have heard some people claiming that they fear deflation happening, um, which is generally not very good on uh, the markets in general, or the economy. At least, rapid drops in or deflation. So uh, it's kind of hard to tell which way this is going to go. But yeah, I really do think that the Fed's going to be backed in the corner. They're going to have to turn on the spigot again. And at that point, the dollar is pretty much toast.
Yeah. Yep. And then, I mean, so, and here's the crazy thing. Everybody should keep in mind with Bitcoin itself. Like, Bitcoin was actually built for this. Like, and I guess this is the part that drives me nuts when I look at the Bitcoin price. Bitcoin was meant as a deflationary currency to actually fight the type of inflation that we see going on. But the major market players treat it as a tech stock.
Yep.
And that's the sad thing about Bitcoin is that this price currently is being determined by one person. And it's basically Jerome Powell and the Fed. If people would actually look at what Bitcoin is and what it's for, this would not be happening. People would be pumping all that excess money that they have into Bitcoin currently rather than trying to treat it as a tech stock. Because that's not what it is. It's a currency. And it was a currency that was designed to actually fight this type of stuff that we have going on.
Yeah. Well, the thing is I mean, I wouldn't even say American people, the whole world, we've been in an abusive relationship with fiat currency. We don't realize it's abusive, but it is. Mm-hmm. But it's what we know, we're not going to leave it until we absolutely have to. And I think, the Federal Reserve is doing a good job in making sure that the dollar is going to die, in my opinion. So just give it more time.
Well, so I'm trying to think of like the setup because we've talked a little bit about this, and I'm going to put a little bit of a tinfoil hat on this, right? We talked, I think, either the last episode or the previous episode where we were talking about the CBDCs and how they were talking about having them coming out in, like, I think it was March of this next year. Yeah. That'll actually be interesting to see if we go through such a harsh winter, basically, right? Where people will be clamoring to get a CBDC. Then it's endgame. People are toast.
Yep.
And that
if they can push that on us, it is endgame. It's over.
Yeah. I fear it, but just kind of give you an idea of what we talked about with the confidence game that goes on with this whole thing with the American dollar. According to the FDIC, the reserves are actually at 119 billion within the FDIC itself. And just for those of you that don't know, the FDIC is actually a depositing insurance, right?
Yes, the Federal Deposit Insurance. Is it a C? What's the C? Anyway, it was created in the Great Depression. Basically, a lot of banks went under, so they said that we're going to create a federal thing to back up banks. So you're not going to relive "It's a Wonderful Life" with you shoot up to the bank and it's all your money's gone and you're destitute.
Yep. So currently, the FDIC sits with a coverage rate of 1.25% for all the deposits that are out there.
Wow.
And I'm sorry, what were you going to say on the butt part?
Yeah. Well, I knew that it was not going to be. They're not going to have near enough coverage for for all of our accounts. If something really bad happens, you're not going to be covered. That's all I'm saying.
And that's the thing is like I don't know if they ever. And I don't know if they just didn't have the foresight because as much as I want to believe that like bankers are evil, I just don't think that they have a lot of different pressures, and I don't think they have the foresight in a lot of ways. And I'm not saying they're not all good, right? But I think some people actually do get into it, and they're greedy, obviously, but they do have the hopes of making things better for people. I think as a whole, like maybe not in the individual level, but as a whole, I don't think when they thought up the FDIC, they had any idea that we would be so interconnected and interwoven.
Yeah.
They thought like a bank run would be like single banks within larger cities would collapse, not the whole thing falling together at the same time. Especially when it was created in the 20s, right? And that's the most backward thing about most of the laws that we have in finance is that they were all created, basically around the turn of the century. Some of them are leftover laws from probably the 1800s and then the early 1900s. And we're trying to control this global economy with those outdated laws. Like, nothing works that same way anymore.
No. No, it's a totally different world.
Indeed. Yeah, and then we're curious to see, like, if this will be what did we say? We talked earlier before I think we started recording. If we close today where we're at now, this is going to be the exact same levels we were at in November of 2020, correct?
Yeah.
So we had stated. So
the stock market's at November 2020 levels. Bitcoin's at November 2020 levels. Things are not looking good.
No, we had a little bit of a reprieve there for a little while, and that was our little dumpy rally that happened. I don't know what today's going to bring, but I mean this is a pretty bad close for us.
Indeed. Buckle up.
November 2020. That's so crazy to think of.
Yeah.
And then we look at those troughs and those valleys that took place after that.
Well, and a lot of the worst stock market days happened in October. So,
yeah,
historically. So,
yeah.
I don't know what's October bringing to us because we're getting close to the end of September.
We are. We have basically a week left. Next week we're going to have like I said, it'll be the end of Q3, and it'll also be the monthly close for Bitcoin is coming up next week. Or this coming week. Our range for this week has been poor. We knew CPI numbers came out. It wasn't. You know what's weird though too is that we see this all the time, especially this whole past year. Every time that this happens, it's like the market, like 3 or 4 days later, gets amnesia, and they're like, "Oh yeah, okay, so interest rates went up," and sometimes they start to come back up. But I don't know if we're going to see that again this time.
I don't know.
Come on, Michael Saylor.
Well, Michael Saylor's going even further in on Bitcoin, so props to him.
Yep. Yes.
How many did he buy? Like another few hundred?
Yeah, I think he bought another 500 Bitcoin. Not as much as what he had done in the past, but he's still holding strong with the MicroStrategy treasury, buying up Bitcoin. Crazy times.
Yep.
I don't know.
Probably, if Bitcoin does take off, they're going to make a movie about him.
They probably will. It'll be like the
Big Short.
Yeah, it'll be The Big Bet or something like that.
Yeah.
Because he'll be seen as a luminary. I don't know. It'd be kind of interesting to see. I'd watch it. Be like, oh yeah, I remember that time.
Yep.
I remember what was going on.
My friends were telling me to buy some Bitcoin, and I thought they were freaking crazy.
I thought they were nuts. They told me dollar cost average and buy every so often. Not financial advice.
No, we're not. But, hey, my what's his name? The other guy from The Big Short, Michael Berry.
Yeah,
is that his name? I mean, he made that bet early on, and he was losing money for a long time before it finally paid off.
I think it was like 3 years or something like that he continued to lose money on it. And I mean, his investors, everybody got mad at him because they were like, "What is going on? Blah blah. You said this was going to happen and this was going to happen." He was just like, "It's coming." Like they couldn't figure it out in The Big Short. Like if you haven't watched that movie, that's a spoiler of the movie. They couldn't figure out why the market was getting propped up because the writing was on the wall a long time ago. Mm-hmm. And they just couldn't figure out they were fudging the numbers.
Yep. Well, that's when we look at the numbers now, I kind of feel the same thing. Everything's fake. I just don't trust anything.
Absolutely. So buy the real digital thing. It's funny to say that, but it's true. It's the irony of it all, right?
Yep.
Information is king in the world of today, and digital information at that. So, anything else you wanted to bring up today?
I think that's it for now.
All right. Well, I hope you all are enjoying your time, and as we enter the spooky season, keep listening to us. Keep in touch. Follow us on Twitter. Hopefully, we'll get a mailing list going up here pretty soon, and we'll just keep plugging away at this. And I hope we'll go through this journey together, and we'll survive it all in one piece.
Yep.
Thank you for listening.